Okay, folks, welcome back. Okay, we're going to be going through a real quick review over the last 2 days price action. I'm sure I'm not going to cover everything, but I just want to give you some content for today because I missed you yesterday with my personal life getting in the way. So we were looking for the dollar, potentially coming down in here and closing this area that was exposed only on the upside. We did get below the middle of this down candle, which we were watching to see if it would be able to hold on to that. The bodies did get through it on here, doing close back above it. We may be just consolidating for another drive higher. And let's give some more data on this chart so you can see it. We still have that 98.55 level that we were looking for, so it still might come into play the rest of the week. It's hard to say in here. It's been a weird day today looking at it in hindsight, but the hang on here 1 second. The pausing above the 97.55 level we had mentioned in the past video presentations. It's interesting that we've been able to do that. I thought we would at least try to come down in here and close this up. Had we done that, then it would have been a lot easier for it to trade higher. But the fact that we're consolidating here, it's still, it's hard to say what it's going to do. But if we go higher, we're looking for that 98.55 level still. The stops we had identified earlier in the week, 97.70, did in fact get rated by 10 pips, and then we've only really moved away into a consolidation, so not much in the way of movement for the dollar. The euro dollar, we had some stops identified that we were looking for below these lows in here. We just breached it just a little bit, not by much, which again, that's not characteristic of what I would expect. I would expect a little bit more of a rundown through that, but we did test and probe below that low, so nothing in the way of terrible sweeping in regards to the stops. That same price action here that at 109.53 level, as you see on this chart, 109.53 being this low over here. You see how price stabbed through that, and we saw a small little reaction there. Looking at London, and I hate to sound like it's all hindsight today because it really is. I've been away from it for over a day, so we have relatively equal highs in here. The market did come back above and sweep it and reach down into the level we were identifying. So the draw on price was the lows in here, or the liquidity pool in the form of sell stops, and that's what drew price lower. I told you to watch that 110 level on fiber. I thought that we were probably going to get a little bit of a push above after coming down and closing in a little bit of this range in here. It didn't do it, but we saw a nice little reaction on the downside. So the level did become like an inversion level. The market did in fact come back up here and trade into that level for a sell-off. I wasn't near the market, couldn't see it, didn't have anything I could have done to capitalize on it, but nonetheless, I wanted to see it trade up a little bit higher, about that 110.40, 110.35 to 110.40. That would have been a reason for me to want to get short there and then reach for the sell stops here if I was going to do anything with a demo, just for example purposes for this week. But nothing I can do here, nothing that excites me either where we're at. Cable. All right, so we had cable. We identified rather the 23.30 level. We had equal highs again from yesterday, but we were looking specifically with where are we at here? These old highs over here, equal highs, looking for a run above 23.30. And we just got close to it. The last 2 days, it's gotten really close to it. Didn't do it. It may still happen. I'd like to see it get up there and do that, because I think if we get up there, then we could potentially see a little bit more aggressive selling to maybe run below the 120, 140s. Okay, but until then, I wouldn't be terribly excited because we're staying real close to that 23.30 level. They're building a lot of trust in that 123.30 level as a resistance. We got one hit just below it today. Yesterday's daily high is a little bit lower than it, and then we have these equal highs over here. So those buy stops, to me, I think they're not out of the water yet. They're in striking distance. Very easy for the cable to get up there and run about 60 pips or so just to tag them. And it can do that right from where we're at here, right into Frankfurt and London, and then sell off. And that would be an interesting condition, because then it would give support to the dollar moving up into that 98.55 level from where we're at in here. So that would make a little bit more sense based on what we're seeing here. CAD, this is pretty wild today. I gave you a study to watch price on dollar CAD. And I don't have the delineators on for yesterday, but we're just going to have to pop that up there like that. Okay, so we saw the market come down into the New York session, had New York session reversal, traded right up to that 131.35 level. And the reason why that's important, I told you on the daily chart, okay, we'd have to stay below the opening on this little small candle. And let me zoom in on that, and I'll show you what that means. Okay, the opening on this candle comes in at 131.34, so we round it to the nearest round 5 level or 0 level. So it'd be 131.30 or 131.35. Okay, 131.35 puts us right in here. We had a sell-off yesterday, but look what happened yesterday. We hit that level. Screw it on over here a little bit. We hit that level right here. Okay, sold off a little bit. One more time at the mean threshold of this up candle. We sold off one more time, swept the highs right in here, and then sold off in London. Then we had news come out today. We had the bank rate decision for the CAD, and we had some other high impact news that came out. Crude oil inventories as well. Did I have that right? I think it's crude oil inventory. Let me double check. Am I telling you the truth on that? Something. I think it was crude oil something, wasn't it? For those that are here live, can you correct me on that? Yes, crude. Okay, I just want to make sure I was looking at the calendar before I got on here. The market came right down to the other level we were watching, which was this low in here, which begins the liquidity void. Let's go back out here a little bit. Right in here. So we got below this low here and above this high here. That's the liquidity void we had identified on the daily chart. So we identified this area for a draw on price for the week. Okay, so the 131.30 to 131.35 level was, again, significant. We talked about that relative to the daily chart. So while we didn't get the sell-off right from there and go straight to hell, it was a little bit of a lethargic price action going sideways, but then the classic London session where we get a little bit of market protraction, it rallies higher, clears some previous day's session stops. Market trades down, goes into the New York setup, going into another wave of selling on the heels of the bank decision and crude oil inventories as well. So that we saw it trade all the way down here. Now here's why I like getting out early. This is a perfect reason why, and I can talk about it in hindsight and have no problems talking about it because it's exactly why I justify why I get out early. Okay, the 130.04 level, which would be the low on this candle here, 130.04. So we would be looking for a move down to that low or a little bit lower, okay, to dip into this liquidity pool or liquidity void rather. And price comes all the way down. Look how close this thing gets. The low comes in at 130.06, 2 pips away. 2 pips away. So that would have been very frustrating if I would have been looking for a move like that and insisted it only go down to 130.04 or just below it, just to see it scream all the way back up to the daily level we've identified, that 131.35 level. Okay, so it's been a pretty wild day on dollar CAD. But what's nice is even though we don't have this opportunity panning out where it went below the low, this is a beautiful opportunity to talk about how the real world's going to make its way into your trading. We have tools, we have concepts, we have premise, and we have principles and reasons for doing certain things. But even with all those things, you're still going to encounter things like this, where this would have been a wonderful, stunning opportunity to be getting short in, holding something from London. Amazingly, if you were selling right at that level from yesterday, holding on to it, watching it scream down and never taking any profit, okay, it would have been disastrous to see something so stunning sell off and never get any of these profits taken on the trade, and to insist, come hell or high water, that 130.04 level gets breached and it never gets there, but just by 2 pips, and then see it scream and rocket up like that. That's why I take trades off the table early. I have to do it because I've seen so many times where I've had just like this, and if you heard me talk about this and why I'd like to scale out or take my profits early, even if I identify a level, and we talked about this level as well, we know why this was here because it's the basis of the liquidity void. that frames this up candle here. It's the fact that we only traded 2 times in here, this candle, and then all through this candle. So this segment of price action is now efficiently delivered. From this point up here to this candle's low, this range on this up move is all been efficiently traded too, because it's been done 2 times on the up move and delivered on the downside. Over here, it's been twice passed through. So we know the exposed area of this up candle right here is between this candle's high and this candle's low. And it just got 2 pips away from that, and then it rocketed all the way back up there. So again, simply because we have identified a level and a reason for drawing price down to it, okay, doesn't mean it's going to go there exactly. And this is the reason why I kind of make fun of folks that say you shouldn't take partial profits, because there's no guarantee that your level is going to be hit. And you can get really profitable by just taking something off the table when it's moving in your favor. If you didn't get all the way down here at this low, and say you just took half the position off and another balance of the position off here as we're going into that, well, look at the time on this. It's 1500 on Forex LTD. Okay, so that's the time of the day when you're going to be expecting some kind of a profit taking. And true to form, look what it does. It rolls the other way. So we have a London close reversal profile. Okay, so stunning fashion as well. So if you've never really given thought about taking profits along the way, let this be an example, because we've identified the reason why this should have went down here. We identified where the liquidity void begins. We know that below that low would be sell stops. So the fact that we would have expected price to be trading down here like we did, okay, that's all fine and great. But it didn't go to where we thought it would go. Just it got real close to it. So in clear definition, you're wrong. I'm wrong. I was wrong on the trade. But you don't have to be correct to be profitable. How many things could you have done in here to be, booking some profit to move below this low over here? All these lows in here on the daily chart, I mean, look at this. You have a low at 130.34 on this candle here. What's below that? They're daily lows. It's going to be liquidity below that. So 130.34, that's right here. Right here, 130.34. So what? You didn't get all the way down here to this low. But if you would have booked profits on every run below each daily low here, because all these lows in here, they all have liquidity below them. And we ran through all of them, just didn't get down to this one here. And we didn't get into the void. It could still come around. I don't see how it could do it right away tomorrow. I mean, we have to take something pretty significant, in my opinion, to get us to wipe all this out. But it can still happen. I mean, just as well as we saw this thing reverse like it did. Anything can happen in price action. You just got to be prepared for the most probable direction. So while I was away, I gave you some things. I haven't had a chance to go through the Twitter to see what everyone's observation was for yesterday, but we talked about, good grief, yeah, specifically the dollar CAD. So that 131.35 level, if you haven't paid attention to that, you got to take a look at this right here and see. You'll know by looking at the previous sessions. I think it was on Monday. Almost certain it was on Monday that we talked about that level there. So I didn't want to see it go above that, and we opened and traded right through it the very next day, and then we wiped out. Then we did another session where we opened and traded down through it intraday today, and I think that was a really good example of why it's important to take some profits. And if you can't find reasons to justify why taking partial profits on an environment like this, because believe me, this isn't a one-time thing. It doesn't just happen like this once in a blue moon. This happens a lot. When you're really trading with live funds, you're going to have a target, you're going to have a level you're reaching for, and if you don't pay yourself along the way and just fund that trader that's in you, that's actually putting the time invested into following the marketplace, you're going to be so frustrated, and there's so many ways for you to just build your bottom line up and not demand the absolute level you're looking for. Targets are just that. They're targets. They're not absolutions. So if we can get the market to move in those directions like we framed out over here, all these reasons down here, okay, with the liquidity void, the fact that we had lows over here, we had old lows here, we had old lows here, we were expecting price to drive down in here. We wanted to see this low violated and see how if we can come down to this void. It's not necessary. How much range was here? From 130, 135 all the way down to 130.30. That's over 100 pips. That's all you need. That's the framework of a one-shot, one-kill. When you're looking for a setup like that in the week, that's all you need is one of those, just one of those, and it can happen in one daily range. It can happen in the course of several daily ranges, but that's all you're looking for. You're looking for a range that offers you 100 pips or more, and minimum 40 pips, because that way if you can get something with a range defined by 40 pips, it's easy to at least pay yourself 20, 30 pips out of that with the factoring of the spread and some fluffing on getting in early or late and your exits being a little bit premature. So I will be presenting the session teaching that I was unable to do last night as soon as I get an opportunity to throw something in my stomach, and I will have that out. I can't promise I'll have it by 8 o'clock, but I will certainly have it on there before I go to bed tonight, and when it is, I'll send it a link on Twitter, and then we'll be back on schedule tomorrow, God willing rather. Okay, and so until then, I will talk with you in the morning. I'll give you a link. We'll do some live session commentary, and hopefully we'll get something in the marketplace so I can kind of like redeem this week if I can. Okay, so with that, wish you good luck and good trading.